Okay, let's go to UK. What will UK's new budget mean for Prime Minister Theresa May's struggling government and the finance chief Philip Hammond? Is this a make or break situation?
Oh, it definitely is. Philip Hammond is very much under pressure, not only from the hard Brexit faction in his political party, the Conservatives, the Tories. They hate him because they think that Philip Hammond is too weak, too much of a friend of a soft Brexit, of a good deal between the UK government and the European Union. But also others have been criticizing Hammond for a long time. He's been a long friend of austerity, you know, of what some people in the financial world call a policy of sound money, which is a policy in favor of low taxes, of very sound fiscal policies, a policy that wants, you know, economic growth created by businesses rather than governments. Many people in the UK and also many people here in the financial world are convinced that this will not be enough, that the government in the UK facing Brexit will have to do more in order to, you know, keep the economy running and in order to tackle the challenges that the UK economy is facing in relation to Brexit and, you know, the time afterwards when it has to live alone without the support of the European Union.
All right, thank you very much, Conrad. See you tomorrow. Enjoy the rest of the day. We'll move on now to the U.S. West Stock Index futures pointed to a higher open as investors geared up for another fresh batch of data and await the latest minutes released by the Federal Reserve. Investors will also be keeping an eye on the publication at 2 p.m. Eastern Time of the latest minutes from the last FOMC meeting, which took place from October 31 to November 1. While the U.S. Central Bank left its benchmark interest rate unchanged at the previous meeting, the Fed did, however, maintain positive language on the current state of the U.S. economy. Investors will likely be poring over the minutes for any indications as to what the Federal Reserve may do in the coming months and what it currently thinks of the health of the U.S. economy. Looking to data, mortgage applications are due to come out at 7 a.m. Eastern Time, followed by jobless claims and durable goods orders at 8:30 a.m. Eastern Time. Consumer sentiment is then set to come out at 10 a.m. Eastern Time. In Asia, markets rose today, taking overnight cues from Wall Street, where stocks rose to record highs after a rally in tech names lifted the broader market. Hong Kong's main index topped the 30,000 level at market open. Australia's ASX 200 finished up 22.89 points, with most sectors advancing. Japan's Nikkei 225 rose 106.67 points, while the Topix added 5.95 points. In South Korea, the Kospi advanced 9.81 points. Chinese markets finished mixed. The Shanghai Composite rose 20.05 points and the Shenzhen Composite fell 5.16 points. Hong Kong's Hang Seng Index broke the 30,000 level in morning trade and closed up 185.42 points. And back here in Africa, Zimbabwe's stock market has shed nearly a third of its value in a week, with investors dumping stocks since the military seized power in the country on November 15. Some foreign-owned businesses have taken precautionary measures to safeguard their human and capital assets, but despite initial fears, most have remained open and are trading as normal.
For a while, the Zimbabwe Stock Exchange looked unstoppable. A record-breaking bull run, fueled by inflation-weary investors seeking refuge in stocks, propelled the market to peak of about $50 billion in early November. Analysts expected a self-correction to cap the spectacular run, but say last week's military operation has only accelerated matters.
To date, I think we have lost north of $4 billion. In terms of market capitalization. Are we still going down? In my view, yes, there's still a lot of downside. We might actually see the market, we believe the market is going to bottom down somewhere inside of 10 billion. And we still have got a few days more to go before we see stability coming back to the market.
Impending changes on the political landscape could lure investors with a long-term focus.
Right now we are staring into real possibilities that probably will see changes on the policy front. There are possibilities that we might actually see changes on the indigenization front, tax laws and so forth. So if you look at that in the long term, I think this is very good for companies.
With Robert Mugabe resigning as president, the new administration will face the massive challenge of addressing the festering issues that have plunged the country into the current economic crisis.
I suspect that everyone knows that fixing the economy is a very, very urgent issue. Giving confidence to the young people without jobs, giving confidence to the investors, working with the rest of the world so that whatever we can get from anywhere in order to get our country going once again.
Under Mugabe, Zimbabwe was largely isolated by the international community and has struggled to attract significant foreign investment. Experts are hoping the change of guard in the government will also bring change to the economy.
Zimbabwean flags were being waved.
And in Zambia, the central bank cut its benchmark lending rate by 75 basis points to 10.25%, citing declining consumer inflation, the high cost of credit and low growth. Inflation has continued to decline over the last 10 months. The central bank also noted that the cost of credit has been high and growth has been sluggish. And South Africa wants the national oil companies of its BRICS partners to help build a new 400,000 barrels per day refinery that will be structured by senior debt and equity. The idea of building a refinery in Africa's most industrialized economy has been under consideration for almost a decade. The Energy Minister, David Malubo, says South Africa is at a tipping point regarding its refining capabilities, adding that the cost of the new refinery was estimated at $10 billion in 2010. South Africa is a member of BRICS, a trading bloc that also includes Brazil, Russia, India and China. Royal Dutch Shell, BP, Total and Sasol are among the main refinery operators in Africa's most industrialized country. We'll take a quick break, and when we come back, Ethiopia is set to rise among world's biggest garment makers. Details in a moment.